Hello everybody, Debbie Taylor here, Managing Partner and Chief Tax Strategist of Carson Wealth. And I am here today to talk to you about starting the year off with, and you guessed it, tax planning, right? My favorite topic, and your favorite topic too, right? So the first thing we want to think about is when we start the year off, we want to revisit tax projections, review the year ahead, make sure that we're on track. And you're like, hey Debbie, we do this all the time. What's the big deal? Well, there's a couple things that are different about this year that you might want to pay attention to. So first of all, we've had a tremendous run up in the market over the last 3 to 5 years. And that run up is creating then larger account balances. And that's creating an entire panorama of additional issues we need to deal with. One of them is large IRAs and retirement account balances creating large RMDs. And so, for example, if you assume a client age 70 with $1 million in the IRA, after 3 years of strong market returns, that IRA grows to $1.5 million, and that RMD then jumps from $37,000 to $56,000. That is a $20,000 of additional income. So the question is, what are you doing with that? Is that going into a bank account? Do you even remember or notice that it's coming in? Are you paying enough in estimated taxes so that you don't have a tax problem at the end, right? And so let's be intentional about these large accounts and about these large RMDs. And then in conjunction with that, let's think about the QCDs. Now remember, the QCD can offset the RMD. You have to be age 70 and a half. But you need to take the QCD first before the RMD if you want it to offset the RMD. So what that means is you need to coordinate the QCD, right, qualified charitable distribution. You need to coordinate the QCD with the RMD, because what you don't want is to take all of your RMDs and then in the fourth quarter be like, oh, I want to be charitably inclined. Oh, let me take it out of my IRA. Let me do a QCD. Yes, you can do that. Yes, it's helpful because it drives down the traditional IRA balance. So that's good. But what you really want to do is take that QCD in place of the RMD when you can, because that's really going to get you the bang for the buck. And the way you do that is you've got to order this properly. The QCD's got to come out before the RMD. And so this is some sort of beginning of the year housekeeping is what I will call it. But let's do that. Let's be thoughtful coming into 2026. And with that then, thank you for listening.